Okay, friends, pay attention now. See, what is the first thing which you will take? Full value of consideration minus transfer expense. You will get net consideration. Okay, out of net consideration, you are supposed to reduce two things: cost of acquisition, cost of improvement. What is cost of improvement? What is cost of improvement? 55(1). Any capital expenditure incurred on or after 1st April 2001, due to which the value of capital asset increases. Any normal expense of current nature like repairs etc. will not be treated as, since these expense does not increase the value of the capital asset. Now, if you incur such type of expense, they will be ignored. Now, what are the examples of cost of improvement? Cost of addition, cost of alteration, extension, etc. will be treated as cost of improvement. Now see, any cost of improvement which you incur prior to 1/4/2001 will not be treated as cost of improvement. It has to be ignored. Now, in case of assets acquired prior to 1st April 2001, the option to take fair market value as on 1st April 2001 as COA is available, which generally covers all such cost of improvement which are incurred prior to. That is the reason why the cost of improvement is ignored. If you acquire the asset prior to 1st April 2001, if you acquire the asset prior to 1st April 2001, now let's take one example. Okay, you acquired the asset in 93-94. Can I say you acquired the asset prior to 1st April 2001? Now, that time, the actual cost of the asset was 1 lakh rupees. How much? And you incurred some improvements also. After you acquired, you incurred some improvement also. Improvement of rupees 20,000. Improvement of rupees. And this improvement was incurred in the year 98-99. Can I say improvement is incurred prior to 1st April 2001? Now, the fair market value as on 1st April 2001 will be the fair market value of this asset or improved asset? Yes or no? So, the asset which has been improved, the fair market value of that asset as on 1st April 2001 is given. For example, it is 2,10,000. How much? And since you are given the option to take this fair market value as cost, don't you think that this fair market value will already take care of that improvement cost? Hello? And if the improvement cost is already taken care of in the fair market value, should it be allowed separately? Hence, any cost of improvement incurred prior to 1st April 2001 needs to be ignored. Why? Reason is very simple. Since the asset was acquired prior to 1st April 2001, the option to take fair market value as on 1st April 2001 is available. And if you will exercise this option, you will take this fair market value. Don't you think that this fair market value will cover your cost also, and it will cover your cost of improvement also? Don't you think 2,10,000 covers this 1 lakh also? And 2,10,000 covers. And if we are giving you the option to take this fair market value as your cost, will you take 1 lakh or you will take 2,10,000? That 2,10,000 covers your cost also, covers your cost of improvement also. So we are not going to allow this separately. Ignore this cost of improvement. But any cost of improvement incurred on or after 1st April 2001 will be considered and it will be allowed as a deduction. Will you remember this? Hello sir. Next one. Now see, any cost of improvement incurred prior to 1st April 2001. We are talking about that 20,000 which you incurred in 98-99. Since the asset was acquired prior to, option to take fair market value as on 1st April 2001, 2,10,000 as cost of acquisition is available, which generally covers all such cost of improvement will be covered here. Hence, this cost of improvement needs to be ignored. Which will you consider? Any cost of improvement incurred on or after 1st April 2001. Yes or no? Okay. Now let's go to indexation. How will you index? And indexation is a benefit or not a benefit? Benefit. Why? Because it inflates, it increases your cost. Right? Now pay attention. Simple logic. If 2009-10 I have incurred a cost of rupees 1 lakh. I have incurred a cost of rupees in 2009-10. Cost of acquisition or cost of improvement, whatever it is. Okay, no? Now tell me, if in 2009-10 the cost was incurred, at that time the inflation was same or inflation was different? Compared to today, the inflation was less. And over a period of time, due to inflation, don't you think that this cost would have also increased? Hello? Now, for example, you acquired one asset, and on that asset, you incurred a cost of rupees 1 lakh. When did you incur? 9-10. So there is one CII table. There is one CII table, cost inflation index. In this CII table, they have taken 1 year as a base year. A year is taken as a base year. Which is that year? 2001 to 2000. That year is taken as a base year. When we were students, no, in my time, when we used to study capital gain, in my time, the base year was 81-82. Base year was, and we used to remember all the CII numbers also, starting from 81-82. 81-82 was the base year. 100 was the CII. Then after that, 82-83, 83-84. Likewise, for every year CII we used to remember also. Right now I don't remember, I have forgotten because it was long back. But you are very lucky that you are new age students. The ICI does not want you to remember the CIIs. It will be given in the question. But remember, the CII table for you has been revised. Long back it has been revised, and now the current CII table, in that table, the base year is a year is taken as base. That, for example, in this year, in the year 2001-2, if the cost of any capital asset was rupees 100, example, 100 was the cost, then as compared to this year, what should be the cost in the next year? Cost would have increased due to inflation. So in the next year, the cost would have been 105. 10. Next to next year, the cost would have been 109. Next to next year, the cost would have been 130. Getting my point? So I'll show you one CII table. Okay. Wait. Cost inflation index table. CII table. Okay, no? See. Which is the base year? 2001-2. Can you see? Forget about the assessment year. Take the financial year. 2001-2. What is the base year? 2001-2. And what is the CII? After that, 2-3. What is the CII? Then 3-4. What is the CII? Likewise, 113, 115. Likewise, for the previous year, 24. For the financial year, 24-25. What is the CII? 300 and. So what I'll do, I'll save image. So the image is saved in the photos, and now I'll take that image here, and then you'll come to know that what I am trying to do. Okay, sir? Hello, sir? Understanding, sir? Very good, sir. Now pay attention. Huh? What is your previous year? What is your previous year, guys? Okay. Now see, in your previous year, if you can see 24, 25, CII is 363. CII is, and in the base year it was 100. What does it mean? It means that starting from the year 2001 to when the cost was, because of inflation, because of that asset became, the cost of that asset became 363 today. Getting my point? The meaning, I'm trying to decode this. So if one asset was costing 100 in 2000, next year its cost increased. Next year again increased due to inflation. And it has increased so much in this year, it has increased so much in this year that the same asset costs you how much right now? Now tell me, that asset was worth how much in 2009-10? So this was the CII, cost inflation index. Now tell me, this 1 lakh is incurred in which year? Sorry, this 1 lakh was incurred in which year? When the CII was? When the CII was? Now I have to bring that cost of 1 lakh in today's terms. In today's terms, I have to include inflation in that cost. Getting my point? So this 1 lakh was incurred when in 2009-10, when CII was 148. Now if I want to bring this cost to current levels, meaning for 24, 25, what should be the cost of acquisition? Because in this year the CII is, so at 148 CII you incurred the cost at the time when the inflation was 148. Now at current level, when the inflation is, what should be that same cost in today's terms? Can you cross multiply? Can you cross multiply? What are you going to do? You are going to take cost multiplied by CII. CII of which year? This is the year of transfer. The year in which you have transferred the asset. In this year you are getting selling price. So you have to bring your cost in today's terms, the year in which the asset is transferred. So what would have been the same cost? What would have been the cost if the cost was incurred in this year? So you are multiplying CII of which year? Transfer year, because 24-25 is the transfer year, and you are dividing the CII of which year? The CII of improvement year, the year in which you have done the improvement. This 1 lakh rupees was your cost of improvement, incurred in which year? 2009-10. So what you did? 1 lakh into 363 divided by, tell me how much? 2 lakh 45,000 270. Instead of reducing 1 lakh, reduce 2 lakh 70. This will be your index cost. Now how will you calculate index cost? Simple. Index cost of improvement. If you want to calculate index cost of, what will you take? Cost of improvement you will take, you will multiply CII of transfer year, and in that, from the in that you will divide CII of improvement year, CII of improvement. This will give you the index cost of improvement. And by the way, this indexation will be done only if date of transfer is prior to 23rd July 2000 and what if the date of transfer is on or after 23rd July? Reduce the cost of improvement only. Indexation benefit is no more available. Now tell me, will you reduce 2,45,000 or you will reduce 1 lakh? If the transfer is on or after 23rd July. But if the transfer was prior to 23rd July, then instead of 1 lakh, you will reduce 2,45,270. Will you remember this? So this is the way in which the cost of improvement is indexed. Cost of improvement is indexed. Same way you have to index your cost of acquisition also. See, how will you index your cost of acquisition? ICOA. ICAI. No. ICOA is equal to COA multiplied by CII of transfer year. Now instead of dividing by CII of improvement year, what are you going to do? CII of acquisition year or 2001-2 acquisition year or 2001-2 whichever is later. Why I have done this? Because sometimes you acquire the asset prior to 1st April 2001. What if you acquire the asset prior to 2001? 100 will start. 100 is starting from. So do you have CII of 96-97? You acquired the asset in 96-97. Do you have CII of 96-97? No, na? So what happens there? Now understand the logic. If you will understand this logic, you will love it. When did you acquire the asset? 96-97. What was the actual cost of your asset? 1 lakh. What was the actual cost of your asset? And the fair market value as on 1st April 2001. This option is given to you or not? If the asset was acquired prior to 1st April 2001, you get the option to take the fair market value. For example, the fair market value was 1,50,000. 1 lakh. Now, do you get the option to take fair market value or cost, whichever is higher? What amount you will take as your cost? Will you take this amount as your cost? Don't you think from here to here, whatever inflation took place, that inflation is already taken care of? From your date of acquisition till 1st April 2001, whatever inflation has taken place, that inflation has already been taken care of. The moment you have taken fair market value as cost. Now, since you have taken this fair market value as cost, so you have to bring this fair market value in today's terms. What is your cost of acquisition? 1 lakh or 1,50,000? So will you bring 1,50,000 to today's terms? Yes. So for that, what are you going to do? Cost of acquisition multiplied by CII of transfer year divided by CII of which year? CII of 96-97? No, because this cost you are not taking. You are taking 1,50,000. So you'll have to index from 2001-2 onwards. Getting my point? So what are you going to do here? Come on, tell me. What are you going to do? Take the acquisition year. What was your acquisition year? 96-97 or 1-2, whichever is. So 1-2 is later. Take the CII of 1-2. Take the CII of. In that case, definitely this amount you would have taken fair market value. So fair market value has to be indexed with effect from 1-2 to your transfer year. Getting my point? Hello. But what if the asset was acquired? The asset was acquired in 2011-12. For this year, CII is available. Now this cost you are supposed to bring to 2024-25. So for this, what are you going to do? cost of acquisition multiplied by CII of transfer year, and now you will divide by CII of acquisition year. Acquisition year was 11-12. 11-12 or 2001-2, whichever comes later. 11-2. Divide the CII of 11-12. Got it, sir? Hello? To make it more simple, cost of acquisition multiplied by CII of divided by CII of acquisition year, and if the acquisition is prior to divide by 100. Divide by, will you remember this? Sure. But wait, cost of acquisition has to be index. Cost of only if the asset was transferred prior to 23rd July. What if the date of transfer of the asset is on or after 23rd July? Will you index? Will you index? No need to give any indexation. Only the cost of acquisition will be. Now what will be the cost of acquisition? It can be actual cost also. It can be 55.2 also. Hello? This actual cost can be notional amount also. It can be actual cost or fair market value, whichever is higher, that also. So first you will have to determine the cost of acquisition properly. And once you have determined the cost of acquisition, then it is very easy to index. Will you remember this? So tell me yes or no. Should I move ahead? What is the index cost of improvement? Cost of improvement multiplied by CII of year of transfer divided by CII of year of. And this cost of improvement will be indexed only if the capital asset is a, only if a capital asset is a, and the transfer of such capital asset is made prior to. And I have taken one example also for improvement, indexation. Yes or no? The same type of example I have given you, but the year and the amounts were different. Got it, sir? Now, what is cost of acquisition? What is cost of acquisition for all assets? Come on, tell me. For all assets, the cost of acquisition will be actual cost, which is nothing but purchase price plus purchase related expense. This will be actual cost. But will you get the option to take the fair market value? Will you take the option to take the fair market value? If the capital asset was acquired prior to? If the capital asset was acquired prior to? Will you take actual cost? Yes. Or will you take fair market value? Yes. Whichever is higher, you will take that as your cost of for all assets. For other than. But for immobile property, what are you going to do? For immobile property, is this option available? Yes. But your fair market value should not be more than. So fair market value or stamp duty value, whichever is lower, that lower amount or actual cost, whichever is, will become your cost of acquisition. Before the break only we have done this. Okay. Next one. If capital asset, any capital asset, including if it was acquired on or after, then this option is not available. Then cost of acquisition will be. So what you did? Any capital asset. Either actual cost or fair market value, whichever is higher, other than immobile property. Now, immobile property, actual cost or fair market value, whichever is higher, but the fair market value should not be more than. Yes or no? Now wait, from those capital assets, you have removed immobile property and you have considered the the cost of acquisition separately. Now, I am removing the assets which are given in 55.2a. 55.2. So, tell me, 55.2a talks about intangible assets. So, the cost of acquisition of intangible assets will not be actual cost. It will not be actual cost or FMV, whichever is higher. That is for all assets, yes or no? And immovable property. But from all assets, if we consider immovable assets, are, sorry, if we consider intangible assets, if we consider intangible assets are considered separately. Intangible assets are considered under section 55(2)(a), under section 55(2), which talks about these assets. Read the names one by one. Come on, fast. Read the name one by one, fast. Goodwill of any business or profession. Second one, brand name of any. Third one, any other intangible asset. Wait. First intangible asset, goodwill. Second intangible asset, trademark, brand name of any. Then they said, we are not going to identify. Last year only, one amendment came. And they said, no. Goodwill is covered. Trademark, brand name is covered. Now, any other will also be covered here only. Earlier, only two intangibles were covered. Goodwill and trademark or brand name. But from last year onwards, they have covered all intangible assets here only. Getting my point? Now, third, after that, fourth is right. Now they are talking about different type of rights. Which right? Right to manufacture, produce or process any article. Right to manufacture. Yes or no? Second one, right to carry on any business or profession. Third one is tenancy right. Fourth one is stage carriage permits. And eighth one is, and till now these many rights were covered. They said, what are we doing? If these rights are covered here, why are we not covering other rights also? So last year one amendment came and one more entry got inserted. Any other right. Can I say all intangibles and all rights will be removed from any capital asset. So any capital asset, what will be the cost? Come on, tell me. All capital assets, what will be the cost? Actual cost if they were acquired on or after 1st April 2001. If they are acquired on or after, if they are acquired prior to 1st April 2001, what will be the cost? Actual cost or fair market value, whichever is higher. From those capital assets, remove immobile property. For immobile property acquired on or after 1st April 2001, what will be the cost? Actual cost. If they are acquired on or prior to 1st April 2001, actual cost or fair market value, whichever is higher. But fair market value cannot be more than. Now from all assets, since you removed what? Immobile property, now you remove these assets also. Because for these assets, the cost cannot be determined as we have seen. The cost will be this. If they are self-generated, you will take cost as nil. And if they are acquired, means you have purchased, their cost will be actual cost. Got it, sir? If you self-generate, their cost will be nil. And if they are acquired, you are not self-generated, you have acquired from someone, then take actual cost. Whether these assets are self-generated or acquired on or after 1st April 2001 or prior to 1st April 2001 will not make any difference. The cost will be either nil or it will be actual cost. Taking the fair market value as cost of acquisition. Option to give the fair market value as cost is not available in the case of assets covered in 55(2)(a), which I have already told you guys. Guys and girls, option to take fair market value as your cost under section is available for all assets except, and you are under which section right now? So if these assets are self-generated or acquired on or after 1st April 2001, what will be the cost? Nil or actual cost. But if they are self-generated or acquired prior to 1st April 2001, what will be the cost? Nil or actual cost. fair market value option is not available for these assets. Will you remember? Hello. So which assets? Any type of intangible asset or any type of right is also your capital asset. Is also your capital asset. So when you will transfer them, the capital gain has to be calculated. The capital gain has to be full value of consideration minus transfer expense. You will get net consideration. What will be the cost of acquisition? If the intangible asset or the right which you are transferring, if the intangible asset or the right which you are transferring was self-generated by you, what cost you will reduce? Nil. And if the intangible asset or right which you are transferring was acquired by you, what cost you will reduce? Actual cost. Option to take the fair market value as on 1st April 2001. Available? Not available. Not available. Even if they were acquired prior to 1st April 2001. Even if they were self-generated prior to 1st April 2001. Cost will be either nil or it will be actual cost. Will you remember? Yes or no? So, the above assets were self-generated or acquired prior to 1st April 2001. Option to take fair market value under section 55(2)(b). Available, not available. The cost of acquisition shall be either nil or actual cost. Only, even if they are self-generated or acquired prior to 1st April 2001. Yes or no? Now, what period of holding you are going to check for these assets? First of all, ask yourself. 4 assets. Name of 4 assets. Do you remember the name of 4 assets? Number 1. Listed shares. Listed shares or listed securities. Don't commit mistakes. Listed securities. Listed. Second asset. Units of equity oriented mutual fund. Next one. Units of UTI. Last one. Ask yourself, are these assets any of those 4 assets? So can you check 12 months period of holding for them? Forget it. 2 assets. Which asset? Unlisted? Unlisted. And ask yourself, are these assets unlisted shares? Are these assets immobile property? So you cannot check 24 months also. How much you will have to check? If their period date of transfer was prior to, you will check 36 months. 36 or less. Short term. More than 36. And if they are long term, you will get the indexation benefit also. Nil into transfer year CII divided by acquisition year CII will be nil only. Hello. Cost will be this only, no friends? Cost will be this only, no? And period of holding you will check 36 months. If the period of holding is more than 36 months, meaning the transfer is taking place prior to 23rd July and you are checking 36 months. Yes or no? If more than 36 months, the asset is long term. What is cost? Nil or actual cost. You are going to get the indexation benefit. Getting my point? But, if the date of transfer is on or after 23rd July, try to identify that where I am, full value of consideration I have taken, minus transfer expense done, net consideration. Now I am talking about the cost. Cost will be either this or either this. Now whether I have to reduce this cost with indexation or without indexation depends on the period of holding. Period of holding I will check 36 months or I can check 24 months. Depends that when these assets are transferred. If they are transferred prior to 23rd July, I will check 36 months. If the period of holding 36 months or less, asset is short term. Cost you have no. Reduce without indexation. And if the period of holding is more than 36 months, cost you have no. Index and reduce. Indexation, why are you getting? Why are you checking 36 months? Because the asset was transferred prior to 23rd July. What if these assets are transferred on or after 23rd July? How much period of holding you will check? 24 months, 24 or less. Cost you know na? Hello? Either nil or actual cost. No need to index. But what if that period of holding is more than 24 months? Asset will be long term. Resulting gain will also be long term. Cost you also know. But this cost will not be indexed because the transfer is on or after 23rd July. Understanding or not understanding? Sure, no? These are the basic things required, I am telling you. If you will not follow this sequence, 100% you are going to read the question 10 times and resulting amount will be also wrong. So always follow these sequence which I am telling you. What is the full value of consideration? I sold this asset for 50 lakhs, full value of consideration. Minus transfer expense. Transfer expense I have reduced. Net consideration I got. But sir, the asset for which I am calculating the capital gain is intangible asset. It is intangible asset or right. Sir, its cost should be. Question will say whether it was self-generated or acquired. If it was self-generated, then take nil. And if it was acquired, actual cost will be given in the question. Take that amount as cost. So did you identify the correct amount of cost? Cost will be either nil or actual cost. Now next question. Should I take the indexation or I should not take the indexation? And what will be my resulting capital gain? For that, I will have to check period of holding. I will have to check. But period of holding will be old period of holding or new period of holding. Depends on date of. So date of transfer will be given in the. If that date of transfer is prior to. So I will check 36 months or 24 months. From the date of acquisition till the date of transfer, if the period of holding is 36 months or less, asset is cost I have without any indexation. Yes or no? From the date of acquisition till the date of transfer, if the period of holding is more than 36 months, asset is cost I have and I will also get the indexation. Old period of holding, long-term capital asset and indexation benefit also. Yes or no? But if the transfer date given in the question is on or after 23rd July, then will I check old period of holding or new period of holding? Will I check 36 months or I will check 24 months? 24 or less. Short term. Cost we have no indexation. Hello. But what if the period of holding happens to be more than 24 months? Then asset is long term. Resulting gain will also be. Cost also I know. But I will not take any indexation. Will you remember? Period of holding to be checked. Shall be 36. Shall be 24. Read this part. This entire part I have just now discussed. Did you understand? Same thing I have just now discussed. Yes or no? Now pay attention. In case where the above assets are acquired from previous owner by way of modes specified under section. Now pay attention. Pay attention. You are an assessee. Did you self-generate? Did you acquire? No. You acquired by way of gift. You acquired by way of. I gave you gift of any of these assets. Can I gift any of these assets to you? Gift is a mode specified under section 49(1). So did you receive the asset by way of gift? Did you receive the asset by way of gift? Is a mode specified under section 49(1). So for you, what will be the cost? Cost to previous owner. Cost to shall be deemed to be your cost of acquisition. Shall be. But for that, you will have to determine the cost in the hands of. You will have to determine the cost in the hands of previous owner, self-generated. Nil. Previous owner. So what will be the cost for previous owner? 55 to A, nil. As per 49.1, that will be deemed to be your cost. Cost to previous owner, nil, shall be deemed to be cost in the hands of assessee. Will you remember? Now tell me, if previous owner acquired, what is the cost of previous owner? What is the cost of previous owner? As per 49.1, it will be deemed to be your cost. Got it, sir? Hello, sir? So, if the above assets are acquired from by way of mode specified under section, there are many modes prescribed under 49.1. Out of those modes, gift is one of the modes. Yes or no? The cost of acquisition to the shall be taken as in the hands of the. So if the previous owner if the previous owner self-generated, what will be the cost in the hands of previous owner? As per 49.1, that will be your cost. Cost to previous owner was nil. As per 49.1, that will be your cost. What if the previous owner acquired? Actual cost was the cost of previous owner. Yes or no? As per 55 to A. Actual cost was the cost of the previous owner. As per 49.1, that will become your cost. Actual cost in the hands of previous owner. Nil in the hands of previous owner will be deemed to be cost of acquisition in the hands of assessee. As per 49.1, because the assessee has acquired the asset by way of modes specified under section 49.1. Yes or no? Yes or no? Now pay attention. See this. And try to remember something like this. $15,000 years back, when dinosaurs were alive, that time this provision was taught by me to you. We were surrounded by Jurassic Park. Dinosaurs were roaming. I was teaching. You were learning 15,000 years back. That time I have taught you this. Don't expect me to repeat this. I have already taught this in PGBP. Specified assets includes tangible assets, intangible assets. Intangible assets used for the purpose of business or profession. Any asset used for the purpose of business or profession. If it is intangible, for that you get depreciation. Cost of that asset will be allowed under the head PGBP in the form of except goodwill was thrown out of PGBP. And you must be wondering where the goodwill has gone. Goodwill has come here. Hello? That goodwill which was thrown out of business has come here. Is it a goodwill which you have acquired for the purpose of your business or profession? Yes. When did you acquire? 1st April 2000. On or after 1st April 2020. Entire cost of that goodwill you are going to claim under the head capital gain. Whenever you will transfer that goodwill, what cost of acquisition you will take? Actual cost, because this was never allowed under the head PGBP in the form of depreciation. But was there any goodwill which was acquired prior to 1st April 2020? Yes, there was some goodwill which was acquired prior to 1st April 2020. Some of its cost was already claimed under the head PGBP in the form of depreciation. Do you remember? I acquired goodwill in 1819. Hello? I acquired goodwill in. So in 1819 I could have claimed depreciation. 1920 also I could have claimed depreciation. Out of the cost of that goodwill, some cost was already claimed under the head PGBP in the form of depreciation. After removing that cost, whatever cost remaining, meaning WDV, as on 31st March 2020, even that will not be allowed under the head PGBP. Even that goodwill was thrown out. and it has come here. So what cost of that goodwill will be taken when that goodwill will be sold later on? Actual cost minus the depreciation which you have already claimed under the head PGBP, remaining WDV as on 31st March is nothing but the remaining actual cost which you are going to claim under the head capital gain. So what will be the cost of this goodwill? The cost of this goodwill will be WDV as on 31st March, and cost of this goodwill will be if the goodwill was acquired. If the goodwill was acquired. And what if the goodwill was self-generated? Nil. Got it, sir? Should I move ahead? Yes or no? Now pay attention. In case of goodwill of business, any other? Hey, don't you think one name is missing? Trademark or brand name? So between these two things, one name is missing. Which name? That I have covered here. So point number 1, point number 3. Where is point number 2? Point number 2 is here. Yes or no? Wait. Then you remember we discussed right to manufacture, produce or process any article or thing, right to carry on any business. Then tenancy right was there, stage carriage permit was there, loomers was there. Yes or no? So they are not appearing. So I have covered them here. So what I have done, I have divided all these assets. See, these assets, the name of these assets, can you see? Yes or no? I have made a summary table. This table you are supposed to remember. Yes or no? Tell me. See, 1, 3, 4, 5 and 9. 1, 3, 4, 5 and 2, 6, 7 and 8. 2, 6, 7. The assets on which I have put a star. And the assets which I have put in circle. Now wait. Goodwill of any business or profession. Any other intangible asset. Right to manufacture any article or thing. Right to carry on any business or profession or any other right. What will be their cost of acquisition if they are self-generated? What will be their cost of acquisition? If they are self-generated, it will be nil, 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 nil and nil. What will be their cost of acquisition if they are acquired? Actual cost, actual cost, actual cost, actual cost, actual cost. No problem in that. Hello? But if these assets are whether self-generated or acquired, their cost of improvement will always be taken as. Their cost of improvement will always be taken as. Which assets? Goodwill of business or profession. Any other intangible asset. Right to manufacture any article or thing. Right to carry on any business or profession. And any other right. Now tell me, number 1, goodwill. Goodwill of business or? Number 2, any other intangible asset. Number 3, right to manufacture any article or thing. Number 4, right to carry on any business or profession. Number 5, any other right. Their cost of acquisition will either be nil or actual cost. If they are self-generated, it will be nil, and acquired, then it will be. But if you have to take their cost of improvement, if you have to take their, whether they are self-generated or they are acquired, will not make any difference. Their cost of improvement will always be taken as. Understood? What about other assets? Other assets means trademark or brand name. Trademark or then tenancy right. Then stage carriage permit. Then these are other assets. See, their cost of acquisition will be, if they are self-generated, it will be nil. self-generated, then it will be nil. And if they are acquired, their cost of acquisition will be actual cost. Yes or no, sir? But wait. For them, their cost of improvement will be taken as nil. It is nowhere written in the law. Cost of improvement of 1, 2, 3, 4 and 5. These 5 assets, cost of improvement will also be taken as nil. These 5 assets, the cost of improvement will also be taken as, it is written in the law. So I will have to take cost of improvement as what? Nil, whether they are self-generated or acquired. But cost of improvement for other intangibles and other rights will also be taken as nil. It is nowhere written. So, if the trademark or brand name is there, trademark or what will be their cost of improvement? Actual cost of improvement you are supposed to take. If you have done any actual cost of improvement, you can reduce that actual cost of improvement. You are not supposed to take nil here. Getting my point? Next one, tenancy right, stage carriage permit or LUMAS. Tenancy right, stage carriage permit or LUMAS. Their cost of improvement will also be taken on actual basis. Whatever actual cost of improvement has been done, that actual cost of improvement you can reduce. Getting my point? So tell me, now if I say how many assets? How many assets? 5 assets. Number 1, goodwill of any business or profession. Number 2, any other intangible asset. Number 3, right to manufacture, produce, process any article or thing. Number 4, right to carry on any business or profession. And number 5, wait. First of all, tell me cost of acquisition. If they are self-generated, if they are acquired, whether they are self-generated or they are acquired, their cost of improvement will be taken as. Their cost of improvement will be taken as. Will you remember? Now, which other assets are remaining? Trademark. Trademark or brand name of any business or profession. Next one. Next one. Next one. Wait. First of all, talk about their cost of acquisition. If they are self-generated, if they are acquired, but their cost of improvement will also be taken as nil. It is nowhere written. So, if they are self-generated or they are acquired, their cost of improvement will be actual cost of improvement incurred, if any. You will reduce that. Will you remember this? Hello, sir. With this and this summary, the 55(2)(a) comes to an end. How many assets? Any capital asset. Sir, any capital asset. What will be the cost of acquisition? Actual cost. If the capital asset was acquired prior to 1st April 2001. Prior to 1st April 2001. Actual cost or fair market value, whichever is. But if that capital asset is immobile property, cost of acquisition will be actual cost. But if the immobile property was acquired prior to 1st April 2001, then actual cost or fair market value, whichever is higher. But the fair market value should not be more than. But sir, if the capital asset happens to be 55(2)(a) asset. 55(2)(a) asset. Whenever it is self-generated, whenever it is acquired, whether prior to 1st April 2001, on or after 1st April 2001, cost of acquisition will always be nil or actual cost. If self-generated, then nil. If acquired, then actual cost. Cost of improvement will also be taken as nil for goodwill of business or profession, any other intangible asset, right to carry on any business or profession, right to manufacture or any other rights. Yes or no? For these 5 assets, cost of improvement also taken as nil. But trademark, brand name, tenancy right, LUMAS, stage carriage permits, their cost of improvement will be actual. Getting my point? Now wait, if the asset was acquired by the assessee, By way of mode specified under section. By way of mode specified under section. Cost to previous owner. Cost to shall be deemed to be the cost in the hands of. So if these assets 55 to A, these assets were self-generated by previous owner. What was the cost to previous owner? Deemed to be cost in the hands of assessee. If these assets were acquired by previous owner, what was the cost to previous owner? Actual cost will be deemed to be the cost in the hands of. Yes or no? Now wait. Period of holding of these assets. Period of holding of these assets. Will you check 36 months or you will check 24 months? If the date of transfer was prior to 23rd July, 36 months, 36 or less. Cost you know na? Cost of improvement also you know na? Will you take indexation? No. If the period of holding was more than asset is, will you take indexation? Cost of acquisition, cost of improvement you know, take the indexation. Yes or no? But what if the date of transfer was on or after 23rd July? Then will you check 36 months or will you check 24 months? 24 months or less. You know the cost of acquisition, cost of improvement? No need to index. But what if the period of holding is more than, you know the cost of acquisition, cost of improvement? Still no need to index because now the indexation benefit is not available. Done, sir? Now let's come to 55 to A. 55 to AA. Now see, in 55 to AA, this is first, shares acquired. This is second, bonus shares allotted. This is third, right offer. And this is fourth, right shares acquired. You will have to apply some logic and common sense. Will you? If I will ask you the question, you are supposed to give me the answer logically. Done? No, sir. Logically and common sense will be enough. Now tell me, 55 to AA talks about shares. Shares acquired means purchased. Now based on these shares which you have purchased, you get bonus shares. You get the right to acquire right shares, which you exercise, then you get right shares. So first of all, to get the right shares, you should first get the right. You should first get the right. And this right will come to you only if you are the shareholder holding the shares. So if you are a shareholder holding the shares, will you get right? Will you get right to acquire the right shares? If you exercise that right, you will get the right shares. Will you only get the right or you can get some other thing also? You can get the bonus shares also. So let's cover the bonus shares also here. Okay, no? Now, say for example, you are an assessee and you have acquired, you have purchased, you have some assets, some shares of any company, some shares of any, and the company is X Limited. 1000 shares you have acquired. How many shares? So, shares acquired. Which shares acquired? Shares of X Limited. Shares of how many shares acquired? How many shares acquired? Apply some common sense. What should be the cost of acquisition? What should be the cost of acquisition of these shares which you acquired? Actual cost. What should be the cost of acquisition? Actual cost. The price which you paid to acquire the shares, purchase price plus purchase related expense. Actual cost of the shares will be cost of acquisition. Now my question, if these shares are acquired prior to 1st April 2001, prior to, will you get the option to take the fair market value as on 1st April 2001? This option is not available only in one case, 55(2)(a). Every other asset, every other case, this option is. So now tell me, are these shares acquired prior to 1st April 2001? What will be the cost of acquisition? Actual cost or as on? Whichever is. And what if you have acquired the shares on or after 1st April 2001? Cost of acquisition will be very difficult, sir. This is same like other assets. Copy, paste. Understanding? Now let's go to, if you will acquire these shares, you will become the shareholder of the company. Yes or no? And company will be very happy. So can the company issue? Now bonus shares, what will be the cost? Common sense. Actual cost. How much you paid to get the bonus shares? Nil. Actual cost will be the cost of acquisition. Sir, copy, paste. For all assets, it is actual cost. So for shares acquired, it is actual cost. For bonus shares, it is actual cost. Yes or no? But my question, if the bonus shares are acquired prior to 1st April 2001, will you get the option to take the fair market value? Can you see the option to take fair market value is not available in the case of bonus shares? It is available for all assets except 55(2)(a). So can I say bonus shares acquired prior to 1st April 2001? Prior to 1st April 2000, what will be the cost of acquisition? Actual cost, which will be nil, or fair market value as on 1st April 2000, whichever is. And don't you think here always the fair market value will be taken as your cost of acquisition? Because even if the fair market value is 1 rupee, it will be higher than nil. Getting my point? So for bonus shares, for acquired prior to 1st April 2000, actual cost, which is nil, or fair market value, whichever is. Always the fair market value will be treated as cost of acquisition. But if the bonus shares are acquired on or after, what will be the cost of acquisition? For all assets, it is actual cost. So for the shares acquired, it is actual cost. For the bonus shares, it is actual cost. For all assets acquired prior to 1st April 2001, actual cost or fair market value, whichever is higher. For shares acquired also, actual cost or fair market value, whichever is higher. And for the bonus shares acquired also, it is actual cost or fair market value, whichever is higher. Will you remember this? Sure, sir. Sir, bonus shares done. Now, after this, can you see right? This is right offer. Now, since you are the shareholder in the company, you have acquired the shares. On the basis of these shares, you got bonus shares. On the basis of these shares, you got. So can I say on the basis of these shares, now you will get the right. Now you will get the right to acquire right shares. So the company is giving you right in the ratio of 2:1. Right to acquire one right share for every 2 shares held. So how many shares you are holding? 1000. How many shares you are holding? You acquired 1000 shares. You became the shareholder. So the company gave you a right. Company gave you a right to acquire how many shares? At a very cheap price of 500 per share. You can buy the share at 500 rupees per share. How many such shares you can buy? No, let's take the amount 300 rupees. 300. So how many shares you can buy? How many shares you can buy? At a price of 300 per share. Yes or no? So before the shares are sold to outsiders in the market, first preference to buy these shares is given to existing shareholder. And since you are existing shareholders of the company will offer you these shares at a very cheap cost, cheap price. What will be the price? 300. Yes or no? Now tell me, the company has given you right to acquire. Now we have two options. Company will give you some time. Within that time, if you exercise the option, then the right shares will be allotted. But what if within this time, you don't exercise the option to buy? The time will be over. The option will lapse. So now, two things can happen during this period. For example, the company has given you time, 7 days time. Some company might give you 10 days time. Yes or no? Some company will give you a week's time or 15 days time. The time will not be 10 years time. Okay, within next 10 years, whenever you want, you can exercise this. No. This right will be given for some days. This will be given for some very limited days. Within those days, you are supposed to exercise the right and buy the right shares. If you don't exercise the right within those days, what will happen? Right will lapse. So will you like if your right will lapse? So what you will do? Within the given time, whether you will exercise the right and buy the right shares, then the right will become right shares. So right will be converted into right shares. Then we will directly talk about right shares. Okay, no? But wait. What if based on the right, the shareholder can acquire additional shares at a. So the right is to acquire additional shares at a. If you exercise that right gets converted into. We'll see it later. But what if you don't exercise this right? So you have another option. You can give this right. You can give away this right. You can give away this right to someone. Giving away your capital asset. Right is also a capital asset. Asset or property of any kind is a capital asset, whether tangible or. Sir, asset or property of is a capital asset, whether tangible or intangible asset, sir. Is it a capital asset? Yes. This right given by the company is also your Capital asset. Because of this right, you will get some benefits. Yes or no? Now tell me, did we check the exclusions? Following assets will not be treated as capital asset. Stock in trade, rural agricultural land, movable personal effects. Yes or no? Gold deposit bonds, gold bonds, special bearer bonds. These were the exclusions. Any of the exclusions, this capital asset is covered. Meaning this is not covered in the exclusion. So asset or property of any kind which is not covered by any of the exclusion will be treated as your and if it is your capital asset, if it is your within 15 days time you had to exercise this right. Did you exercise? No. Within 15 days you gave away this right. You gave away this relinquishment. Remember, relinquishment of a capital asset is also a transfer. So do you have a capital asset? Do you have a capital asset? And are you relinquishing your capital asset? 100% capital gain will arise. 100% capital gain on relinquishment of your capital asset. What was your capital asset? What was your capital asset? Right was your capital asset. And this right is renounced in the favor of someone, meaning it is relinquished, meaning it is transferred. Capital asset transferred. Capital asset transferred will result into capital gain. Now you'll have to calculate capital gains here. Now tell me, what did you transfer? In whose favor? Assume that you are the shareholder. You are the holding 1,000 shares. Company gave you the right to acquire how many shares? Right to acquire how many shares? At a price of rupees. So when you will exercise that right, that time the company will take 300 per shares and company will issue right shares to you. But did you exercise that right? Or you renounced that right? So now that right is given by you to me. I am not the shareholder of the company, but I want to buy these shares at 300. Because these shares in the market are very costly. And since you are the shareholder, you are getting the benefit of buying these shares at 300 rupees per share. Bloody, if you don't want to buy, give your right to me, no? So I took the right from you. Am I the shareholder of the company? No. You are the shareholder. I am a non-shareholder. Will I take the right from you? By taking the right, I will buy the right shares from the company. What benefit will happen to you? Will you just give away your right to me without charging any consideration? Or will you charge something for renouncing your right? That something which you will charge, will be the full value of consideration. You said, sir, take my right. One right I am giving you 50 rupees. How much? How many such rights? 500 rights you gave. Per right, how much you took? 50 into 500. Did you earn 25,000? Did you earn 25,000 by relinquishing? That is full value of consideration for transferring your capital asset, which is right. So can I say full value of consideration will be amount received on? Am I calculating capital gain for myself or you? This capital gain is being calculated for you, the shareholder, who has relinquished the right. Have you relinquished your right, friends? For how much? 50 rupees per right. That will be the full value of. So 50 into how many rights you have relinquished? Possible that you can relinquish the right of 200 shares also. Possible that you can relinquish the rights of 100 shares also. But in my example, we have taken that all the 500 shares right, you have relinquished. So 500 shares, right of 500 shares is relinquished. Per right, how much taken? 50. Can I say that will be your full value of consideration for transferring your rights, transferring your capital asset? Now tell me, what type of capital asset you are transferring? What type of capital asset you are transferring? Right. What is the full value of consideration? 25,000. Amount received on minus transfer expense will give you net consideration. What should be the cost of acquisition? 55(2)AA says that whenever the capital gain will be calculated for renouncement of right, renouncement of, the cost of acquisition will be why? Apply common sense. Are you a shareholder? You got the rights. How many rights? How many rights you got? For that, did you pay anything to the company? So what was the cost of rights? And for that, how much you are getting? Entire 25,000 is your gain. 25,000 is the full value of consideration minus cost of right is nil. Hello? And the entire amount received on renouncement will be treated as your gain. Always capital gain will arise. There cannot be a loss. Why? Because you will always receive money and the cost will be always nil. What cost per right? Did you give anything to the company? That company take 500 rupees and give me the right. Company take 300 rupees and give me the right. Company take this 1000 rupees and give me the right. Company gave you the right just because you are a shareholder. Without charging anything, the right came to you. So what was the cost of the right? Nil. And that right, if you are transferring for 50 rupees per right, meaning 25,000 you are earning, capital gain should arise. 25,000 will be treated as your full value of consideration minus cost of the right in your hands will be nil. Entire amount has to be treated as your gain. If you are getting a loss here, bring your SRO number to me. If ever you will get a loss here, bring your SRO number. I will write a letter from my own sweet hands to dearest ICAI. SRO number this. Immediate effect, cancel the registration. This poor fellow is getting loss in the case of transfer of right, where the cost is nil, and still this bloody fellow is getting loss. Not fit to become a chartered accountant. A person of insane mind. And insane is also the same. Got it? So there will always be, what will be the full value of consideration? Guys, what will be the full value of consideration? Amount received on? Amount received on? What will be the cost of acquisition? What will be the cost of acquisition? And there will be always. Now tell me, what will be the nature of this gain? To determine the nature of the gain, I will have to determine the type of capital asset. Whether the asset is short term or, what was my asset? This was my capital asset, no? So I will have to take the period of holding. I will have to take the, from which date the right was offered. From which date the right was, that is the date on which you acquired the right. Date of acquisition. Date of, the date on which the company offered the right. From that date you started holding the right. Holding period of the right will start from date of offer by the company. Date of offer by the, from this date you started holding the right till what date you were holding? Can I say till the date of? This will be the period of holding. You cannot take any other period of holding. Do you remember yesterday there was a period of holding table which I skipped. I said this period of holding table I will automatically cover in later on discussion. In that table, no, there is this case. In case of right renouncement, in case of renouncement of right entitlement, the period of holding of the right, the period of holding of the right will be taken from date of right offer, date of right, till the date of renouncement, till the date of when the company offered to you and when you renounced. The date on which company offered you, from that date you started holding. And the date on which you renounced in my favor, till that date the period of holding will be taken. And that period of holding will be always some days only. Because the company has given you 15 days time to exercise. So date of offer and date of offer, from that date 15 days, yes or no? So will you hold it beyond 15 days or you will renounce within 15 days? So date of offer till the date of renouncement will never be more than 15 days. It will be some days only. It will be some. And based on these days, this asset will always be short term. Based on this period of holding, the asset will always be short term. Hence, always the gain will arise. The nature of that gain will always be always the gain, and that gain will always be short term. There cannot be long term gain here. And there cannot be a loss also here. Always gain. And always that gain short term. Will you remember this? Hello? Tell me. So what is the period of holding of right offer? What is the period of holding of right offer? Date of right offer by the company till the date of renouncement. How many months will you check? 12 months. 4 assets, 12 months? No. 2 assets, 24 months? No. All other assets, 36 months. Always less than 36 months. And if the renouncement is on or after 23rd July, so you are not going to check 36 also, you are going to check 24. This will always be less than 36 months. This will always be less than 24 months, because this will be some number of days only. Some number of days. Getting my point? So certain number of days only, which would always be less than 36 months, or if the renouncement was prior to 23rd July. So this period is always less than 36 months, because this period will be of some certain number of days. If the renouncement was on or after 23rd July, the renouncement was on or after 23rd July. So this period will always be less than 24 months, because this period is certain number of days. So whether you check 36 months, whether you check 24 months, whether you check 36 months or you check, will not make any difference, because this will be certain number of days. Yes or no? Now, if renounced prior to, check the period of holding. Check the whether it is less than 36 months. Yes, because it will be certain days. If the renouncement happens on or after 23rd July, check the period of holding. Less than 24. Yes, it will be less than 24 months. Got it, sir? Should I move ahead? Now tell me, how many options you had? How many options you had? The company gave you right. And right to exercise the right, 15 days were given. Within 15 days, you renounce the right. Then entire discussion is done. Hello? Entire discussion is done. Now, within 15 days, if possible, you will not renounce. Can you exercise the right? Can you exercise the right? Then bloody this calculation is not going to come. Because this calculation will come only after you renounce the right in the favor of some non-shareholder. Are you renouncing the right or yourself exercising the right? Are you giving the right to someone? Or you are having the right and buying the right shares on your own? So this calculation is not going to come now. Now you are having right shares. Now you are having, tell me, right is converted into right shares. Right is converted into no tax effect on this conversion because you are not getting any money. Company gave you right, you exercise the right and you are getting right shares. Company gave you right, you exercise the and you are getting the right shares. Company gave you exercised the and you receive the right shares. Done. Let's talk about your right shares. How many right shares you can buy? You got the right to buy 500 shares. All the rights exercised. How many right shares you can buy? 500. At what price? So you will give 300 rupees to the company. 300 into 500. Tell me. 1 lakh. This is the actual cost of right shares. This is the, can I say, amount paid to the company. Amount to acquire the right shares is nothing but the actual cost of right shares. That actual cost will be your cost of acquisition. That actual cost will be the, but wait, if these right shares are acquired by you prior to 1st April 2001, do you know actual cost? 1,50,000 will be taken as cost of acquisition. Hello, sir. But what if these right shares were acquired by you prior to 1st April 2001? Will you get the option to take the fair market value? Option is available for all assets except, so the right shares acquired by you prior to 1st April 2001. What will be your actual cost? Amount paid to the company. Amount paid to the company to acquire the right shares. 300 rupees per share. Yes or no? Will be your actual cost. Or fair market value as on 1st April 2001. Whichever is higher. Whichever is. So if the right shares were acquired by the shareholder himself by exercising the, when did he acquire? Prior to 1st April 2001. What will be the cost of acquisition? Actual cost, meaning the amount paid to the company, 300 rupees, or fair market value as on 1st April 2001, whichever is. Sir, what if the right shares were acquired by the shareholder himself by exercising the right on or after 1st April 2001? What will be the cost of acquisition? Actual cost, amount paid to the company, 300 rupees. Difficult. Apply some logic, you will get the cost. Now tell me. Second case was, you renounced the right. In whose favor? My favor, no. Did I take the right from you? Why? I will take the right and I will eat idli sambar on it. Or that right, I will go and exercise. So I took the right from you so that these right shares I can buy from the company. So now tell me, right shares are acquired by you or it is acquired by person in whose favor the right was renounced. Can I acquire these right shares? Because I am the person in whose favor the right was renounced. So if you did not exercise the right, you renounced the right, for you the capital gain was calculated. Hello sir. And for you the capital gain was calculated on renouncement of the right. Now right came to me. Now right. Now if the right came to me, will I exercise the right? So tell me, who am I? I am the person in whose favor the right was. Can I buy the right shares from the company now? Within 15 days, you give the right to me. Now I will take this right and I will go to the company and I will exercise the right and I will buy the right shares. What will be the actual cost of right shares for me? Will I give 300 rupees to the company? Yes or no? Is it my actual cost? No. I gave 50 to you to buy that right. So one right for 50 and that I exercised and I gave to the company. How much? 300. So one right share for me, actual cost was 300 plus 50 to acquire the right. So what was my actual cost? What was my actual cost? 350. Yes or no? Multiplied by the number of shares. So 350 was my actual cost. Can I say my actual cost will be my cost of acquisition? And if I acquired the right shares prior to 1st April 2001, even I will get that option. My actual cost or fair market value as on 1st April 2001, whichever is higher. Sir, in your hands, what will be actual cost? The amount which I paid to the company, how much? And the amount which I paid to you on renouncement to get the right, how much? 50. So what will be my actual cost? 350. What will be my actual cost? 350. That will be my cost of acquisition. And if I have acquired the shares prior to 1st April 2001, then 350 or fair market value, whichever is higher. What will be your cost if you exercise? What will be your cost? Simple. The amount paid by you to the company to acquire the amount paid by the shareholder to the company to acquire the will be the actual cost. And that actual cost will be taken as your cost of acquisition. And if the right shares were acquired prior to 1st April 2001, then fair market value as on 1st April 2001 or 300, whichever is higher. Done. 55 to AA, done. But wait, simple question should I ask you? Will you give me the answer? And I'm not asking something which you don't know. I'm asking something which you already know. What is this? What is this? And what is this? Shares, shares, shares. Purchase shares, bonus shares, right shares. Yes or no? Shares, shares, shares. Listed. Listed. Period of holding. For listed securities. Securities also include. What period of holding you check? What period of holding you check? 24 months, 36 months. Listed securities, 12 months. Sir, securities also include shares. Whether the shares are purchase shares, bonus shares or right shares. Can these shares be listed shares? Listed shares is equal to listed securities. For listed securities, how many months? 12 or less? More than 12. Whether the assets are sold prior to 23rd July, On or after 23rd July, you will always check 12 months. You will always check. But wait, the period of holding will start from date of purchase and it will end on date of sale because the shares are listed. Because the shares are understanding? Wait. What is this, sir? What is this? Sir, what is this? I'm again talking about shares. Unlisted. How much period of holding you will check? Check 36 months now. Check 12 months. How many months you will check? Why? Unlisted shares and immobile property. You check the period of holding. So you will check how many months? 24 months. Yes or no? 24 or less? More than 24? Transfer made prior to 23rd July. Transfer made prior to 23rd July. 24 months. Less than or equal to 24 months. Short term. More than 24 months. And then you will get indexation also. Cost you know. Cost you know. Now this cost you will index. But wait. If these shares are transferred on or after 23rd July, then also you are going to check 24 months. Then also you are going to check 24 or less. Cost you know. No need to index. Yes or no? And more than 24 months? Long term. Cost you know. Still you will not do any indexation because the transfer was made. Got it? No? But tell me no. Period of holding of unlisted, listed shares, period of holding, you have to check 12 months. From where to where? Date of purchase to date of sale. This is the period of holding for listed shares. Hello? 12 months you have to check. From which date to which date, period of holding will be checked for unlisted shares. Date of purchase to date of, I will give you a tight slap if you will do that. For unlisted shares, whether they are purchased or they are bonus shares or they are right shares. If the shares are unlisted, you start holding them not from the date of purchase. You start holding them from the date of allotment. So their period of holding will start from. And it will end on the date of transfer. Date immediately preceding to date of transfer. That period 24 months or less, short term. More than 24 months, long term. And if the transfer was made prior to 23rd July and the asset was long term, then you are going to take indexation also. Will you remember? So first of all tell me, listed shares, purchase shares, bonus shares, right shares can be listed shares? Yes or no? Period of holding from which date to which date? Simple. Date of purchase to date of 12 months or less, short term. More than 12 months, long term. Yes or no? If short term, no indexation. Cost you know. Cost will be determined in this manner only. Yes or no? But there will be no indexation. What if the period of holding is more than 12 months? Will you take indexation? Yes. Will you take indexation? Yes. But wait. Only if the transfer was made prior to 23rd July and the shares are not covered by 55 AC. Shares are not covered by 55 AC. Long-term gain is not to be calculated under section 112A. So what I am telling, please pay attention. Which type of shares I am talking? Shares are listed. Period of holding. No. From date of purchase till date of sale. This period of holding up to 12 months. Short-term capital asset. Short-term capital, and this is more than 12 months. So, long-term capital asset. Indexation, yes. Indexation, no. Tell me, when will you take indexation? If the transfer is prior to 23rd July. When will you not take indexation? If the transfer is on or after 23rd July. Now since we have talked about, so listed shares, indexation we are taking. Indexation we are, if they are transferred prior to, if LTCG is not to be computed under section 112A, if the shares are not listed equity shares, if the shares are not transferred through recognized stock exchange on or after 1st April 2018, those conditions of 112A will be satisfied, then for these listed shares, no indexation benefit is available. Prior also it was not available, on or after 23rd July also it is not available. Getting my point? So I am taking indexation if the asset was transferred prior to 23rd July. I am taking the indexation assuming that the shares were, the long-term gain is not to be calculated under section 112A. Getting my point? And if the long-term capital gain was already covered by 112A, so even if the asset was transferred prior to 23rd July, I was not supposed to get any indexation. Got it, sir? So what was these shares? Listed. Listed shares, how much period of holding? From which date to which date? Date of purchase to date of sale. Up to 12 months? More than 12 months? Long term. Then will you take the indexation? Yes. Will you take the indexation? Yes. Provided long term gain is not covered by 112A. Provided long term gain is not covered by 112A and the transfer was made prior to 23rd July. Getting my point? What if the asset is long-term capital asset? Will you do any indexation? No. Why? Because the transfer is on or after 23rd July. Okay. Now tell me, can the shares be unlisted? Yes or no? Period of holding. Period of, from which date to which date? Date of purchase. Date of purchase or date of allotment? Date of allotment to date of transfer. Date immediately preceding to date of transfer, meaning date of transfer. Yes or no? Now tell me, this is the period of holding. This is the period of holding. Now pay attention. You will check 24 months whether the transfer is made prior to 23rd July, on or after 23rd July will not make any difference. Earlier also 24 months, now also 24 months. So if up to capital asset is and greater than 24 months, greater than, it will be long-term capital asset. Indexation will be available or not available? Available. Indexation will be available or not available? Not available. If transfer is made prior to 23rd July, then the indexation will be available because the asset was long term. Hello, what if the transfer is made on or after 23rd July? On or after? Then no indexation, even if the asset is long term. If these things you are not understanding, no, forget about capital gains. Because these things they ask in the exam. And majority of the questions which are framed on capital gain, either they ask you immobile property or they will ask you about shares. No other asset they ask. They either ask you about immobile property or in the capital gain they will ask you about shares. And they will tell you to calculate capital gain. Will you be able to do it? Now first of all, tell me how the cost of shares will be determined. How the cost of shares will be determined? 55 to double A. 55 to, you know now how to determine the cost of shares. We have already learned this. 55 to, shares are purchased prior to 1st April 2001, on or after 1st April 2001. Cost will be this only, yes or no? So there is no problem about the cost. Determine the cost like this. Now whether to index this cost or not, depends on period of holding for listed shares, date of purchase to date of sale, which should be 12 months or less. Asset will be short term. Cost we know, this or this or this. This will be the cost, yes or no? So whether the purchase shares, bonus shares or right shares, cost we know. And date of purchase to date of sale, the period is also 12 months or less. Cost will be reduced without any indexation. Hello? Date of purchase to date of sale, the period of holding is more than cost we know. We will take indexation. We will take, because the period of holding is more than 12 months and the transfer has taken place before 23rd July. Sir. Period of holding was more than 12 months. Period of holding was. We know the cost also. Don't index that cost because the date of transfer was on or after 23rd July. Getting my point? Sir, what if these shares for which you are talking about is unlisted, sir? Is unlisted. Then cost will be like this only, whether the shares are listed or the shares are unlisted. Cost you have to determine like this only. Have I told you that the cost will be this only? The cost will be this only if the shares are listed. Where I have written that the shares must be listed? Come on, tell me. I have just written shares. Whether listed or unlisted, cost will be like this. Bonus shares, cost will be this only, whether listed or unlisted. Getting my point? Right shares, listed or, cost will be like this. Period of holding, date of purchase to date of sale, date of allotment to date of transfer. Period of holding 12 months, period of holding 24 months. Less than equal to 12 months, less than equal to 24 months. Cost we have, no need to index because the asset is short term. If more than 12 months, more than 24 months, cost we have, we will index. If the asset is held for more than 12 months or 24 months. Got it, sir? Because the asset is long term, cost we have and we will index. But only if the asset is transferred prior to 23rd July. What if the asset is transferred on or after 23rd July? Asset is transferred on or after 23rd July. Period is also more than 12 months. Period is also more than 24 months. Asset is long term. No need to take any indexing. Cost you know, no need to take any indexation. Cost will be like this only. Hello, sir. Will you remember this? Entire thing. Now that table which was there, no? Which table? No. Table of period of holding. Table of. From that table, I have covered 3 points. Here, while discussing only. And when you'll go home today, and when you'll read these notes, no, you'll come to know. Oh, sir was talking about this. Bonus shares. Period of holding is to be taken from date of allotment. Sir was talking about right shares. Oh, period of holding has to be taken from date of allotment. Oh, sir was talking about right offer. Period of holding is to be taken off from right offer to right renouncement. I have already spoken all these things here. And it is just presented in that table of period of holding. Yes or no? But logically it should be discussed here. So I have discussed it here. Okay. Should I move ahead? Yes or no? Is already? Oh my God. Oh my God. See. Can you see listed, unlisted? Can you see listed? Okay. All these things I have discussed. Now from here we are going to start after the break. So take a break. How much time break you want? Half an hour. So take half an hour break. Then half an hour we are meeting. And after half an hour we will start with the balance part. And once this balance part will be over, the majority chunk will be over. Don't worry. Then after this everything will be fast. Okay. Are you all understanding? Comfortable with this? Or you want me to go more fast? This is okay, no? Okay. Why I am going slow deliberately? You are knowing that many things you did not know. And now you are coming to know. And when you will be solving the question, no, automatically now there will be a confidence. Getting my point? So take a break for half an hour. Within half an hour we are meeting. Okay. 45 minutes. Lunch break, 45 minutes. Take 45 minutes.